Hello everyone. Thank you for joining me in today's webinar. Today we're going to be talking about how to analyze your client's tax situation. But before we get to the content, I'd like to introduce myself. For those of you who don't know me, my name is Vinar AR. I am a tax attorney and the founder of AR Law. My expertise is in favorably resolving federal and state tax problems. I know procedural rules inside and out, and I know how things actually work at the IRS. Feel free to call or email me at any time, no charge, and I'll be happy to answer any tax questions you might have. I even have a direct line set up strictly for accountants and attorneys who want to call me with questions. That's the number on your screen. Take a moment to write it down and keep it somewhere handy because you never know when you might need it. So the types of questions you might ask me is how to help somebody if they're behind on their taxes or if they're being audited or otherwise investigated by the IRS, how to handle an appeal, what to do if the IRS accuses you as a tax preparer of misconduct. Pretty much any kind of problem somebody might have with the IRS, I know how to solve it. I can tell you what steps you need to take to get through it. So without further ado, we will move on to today's content. So this segment is going to be about how to analyze your client's tax situation. In this 50 minutes, we're going to learn what to do when a client walks in your door and they have a tax problem and don't know where to begin. We're going to cover how to take a look at the situation and come up with a game plan to determine the best possible resolution. We have 5 different things to cover today. First is basics of the analysis, and then we're going to go over how to handle an initial consultation. Then we're going to talk briefly, a quick refresher on how the financial analysis works. Then we're going to talk about how to read IRS transcripts and to do a compliance check. And then finally, I'm going to teach you guys how to go over this information and review it with your client. So beginning with the basics of an analysis, what am I talking about? What is an analysis? It is in the first step in what I call a resolution case. What I mean by a resolution case is your standard case. Most of the people who walk in your door are going to be people who either haven't filed, haven't paid their taxes, or both. They usually come in and they're several years into their problem. They don't really know what's been filed, what hasn't. They don't know what they owe. They don't know where they are in the collection process. And so the first step in one of those cases is to do an analysis. And the purpose is to get a basic understanding of the client's tax and financial situation so that you can ultimately determine which resolution is best for the client and make a recommendation. Here are the main questions you're trying to figure out. How much do they owe? For what years do they owe? Which returns have been filed? Which returns were they required to file that they didn't? Why do they owe the money? Is the debt dischargeable in bankruptcy? Do they qualify for penalty abatement? Most importantly, what has the IRS done to date to collect, which can help you predict what is the IRS's next move? These are just some of the questions you're trying to figure out. The point is that you need to get a very thorough and a very detailed understanding of your client's problem and your client's financial situation so that you can help guide them towards the best possible resolution. So there's 4 steps in an analysis process, at least the way I do them. First, it's an initial consultation. It can be done either over the phone or in person or via Zoom more and more frequently. It's basically the first meeting with the client to discuss their problem in detail. There's also a financial analysis portion. That is where you try to determine the client's financial situation and ability to pay. Oftentimes, this can be done during the initial consultation, but it doesn't have to be. I like to keep my consultation short. I get the client signed up, and then I have somebody else in my office contact them for the financial interview and analysis. And then you're going to do a compliance and transcript check. You're going to review the relevant IRS transcripts to figure out the client's tax problem. If necessary, you will call the IRS to ask them questions about the situation and find out from the IRS's point of view, what do they see? And then you're going to make a recommendation so that you can prepare for the 4th step, which is to review your findings with the client and to make a formal recommendation as to what you suggest they should do to resolve their problem. So now, here are some of the possible things that you might recommend as the best course of action for your client. Could be an offer in compromise, could be an installment agreement, could be non-collectible status, innocent spouse relief, a penalty abatement, audit reconsideration. There's a whole slew of things that are available as tools in your disposal to help resolve a taxpayer's problem. Your job as the professional is to understand how all of them work. If you don't understand how all the resolutions work, you'll never be able to do an analysis. Even though it's the first step in a resolution case, it is also the hardest because it requires you to know what you're doing so that you can exercise your professional judgment and make recommendations for your clients to follow. So, the first step, like I said, in an analysis process is the initial consultation. What you want to do in the initial consultation is you want to meet with your client to talk about their tax problem. Find out from their perspective what happened to get them into the situation. What do they plan to change to prevent this from happening again? What is their main objective and end goal? And what made them come in? And then the most important question you should ask them, it is not on the slide, but you should always ask, what is it you're hoping I can do for you? Or another way to phrase it is, if I got out my magic wand and I wanted to wave it, what would you want me to make happen? Because if you don't understand their objectives, you will not be able to effectively make a recommendation. For example, somebody might just want to buy a house. That might be their main driving factors. I can't get a house until I get my tax problems resolved, and I need to get a house now. Well, for that person, I'm not going to recommend an offer in compromise because, as you know, that's like an 18-month process. And if their objective is to quickly buy a house, then I might recommend that we get them on an installment agreement so they can get a mortgage and then revisit the possibility of doing an offer in compromise later. If their main objective is just to kind of put the IRS at ease and to put this on the back burner, you might make a different recommendation. You have to find out what it is that they're hoping that you can accomplish for them and why it matters to them, because then you can make a recommendation that accomplishes their goals. Okay? It's very embarrassing when you recommend something to a client and then you tend up to be way off the mark because you never asked them what it is they're trying to achieve, and you just assumed, like most people's goal is to pay the least amount possible to the IRS, just to pay as little as possible and to get through this collection case. But that's not everybody's goal. So you have to be sure to explicitly ask them that question. And then if they decide to move forward with an analysis, you're going to want to get a Form 2848 that authorizes you to talk to the IRS on their behalf. Of course, you should also get a fee agreement. I don't do analyses for free. My standard fee is $1,000 to review somebody's situation and to give them a recommendation. I always tell them it's the best $1,000 they'll spend on the case, because then they can take my recommendation and do it themselves from there and not have to pay anybody. Or they can pay me to finish. It's up to them. Or they might not need any additional work. After they get an analysis, they might understand that they don't really need to do anything right now. So it's very important that in every case you get, you take the time to stop and analyze the situation and come up with a game plan, because without a game plan, you're just shooting in the dark. So once you get the power of attorney, what you need to do with it is fill out all the appropriate information. You fax it to the CAF unit. That's the division at the IRS that's responsible for processing powers of attorney. In Michigan, where I'm at, we send powers of attorney to the Memphis CAF unit. The fax number is on the screen. There are other CAF units, so you have to look at the instructions to the power of attorney. For the state you live in, it'll tell you where you need to send it. They generally take up to 2 to 3 weeks to process. That's now during COVID. They used to process in 3 or 5 days. And once the power of attorney processes, what that means is the IRS will have you on record in their computer as authorized to talk about that taxpayer so that you can get the information you need. This is what a power of attorney form looks like. Notice the red box. There is a number there called the CAF number. That is a unique identifying number for everybody who represents people before the IRS. If you don't have a CAF number, don't worry. They're really easy to get. All you have to do is fill out your first power of attorney, and leave the CAF number blank, and the IRS will just assign one to you and send it to you in the mail. There's no application process or anything like that. There's a spot for your PTIN, but if you're not a preparer, don't worry about that. You don't have to have a PTIN. And so you just fill it in. You fill in information about yourself, about your client, about the things you're authorized to discuss, about your licensing, and what makes you qualified to represent them. You have to be either an attorney or a CPA or an enrolled agent, and then you send that into the CAF unit. So that brings us to our first polling question. So moving along, after you've met with the client, you've gotten a full understanding from their point of view what it is their problem is and what it is they're hoping to accomplish. The next thing to do is to do a financial analysis. There's three things that you need to find out from your client. You need to find out information about their assets, about their income, and about their expenses. The purpose of the financial analysis is to determine what their net equity is in assets, and also to try to determine what the taxpayer's disposable monthly income is. Disposable monthly income is defined as income minus reasonable, necessary living expenses equals disposable monthly income. Now, don't get too hung up on the specifics. For purposes of the analysis, you don't need precise numbers. You just need reasonable estimates. What you're trying to accomplish is you're trying to get a basic understanding of what the client's financial situation looks like so that you can determine what types of resolution and what types of programs they might qualify for. And then you'll have time later to get a more detailed financial situation. Just try to find out approximately how much they make. Try to find out approximately how much their bills are. Ask them about their savings and their other assets to just get an understanding of what their ability to pay is, because that will determine their qualifications for many of the different resolutions. So now, when you're asking about the assets, you're going to want to ask about stuff like bank accounts, investment accounts, real estate, vehicles, RVs, collectibles, artwork. Make sure you cover everything and ask them anything that they have with significant value. We don't need nominal things. I don't need to know how many pairs of shoes are in their closet. But I do want to know if they have expensive jewelry and, lots of furniture, anything with significant value you need to know about. Make sure they understand that just because they tell you doesn't mean that you're disclosing it to the IRS right then and there, but you need to know everything. So the next section, or the next category of financial information you need in the analysis, is their income. You're going to want to look at things like their paycheck. If your client is self-employed, you're going to want to ask about a profit and loss. Now, a common thing that self-employed people do wrong is that when you ask them how much their income is, they'll just tell you what their gross income is. Of course, we all know that's just a meaningless number. Just because your gross income is one number doesn't mean that's how much you really make. What we're really interested in is what's your income after paying your business expenses? How much are you actually taking home? See if they're on Social Security, if they get a pension, if they have any rental properties, any alimony or child support. It's important to keep in mind that when we talk about income for financial analysis purpose, we're not only limiting it to taxable income. I don't care if it's a gift. I don't care if it's a non-taxable source. I just want to know what resources they have available to them. And then we're going to go over their expenses. These are the allowable expenses. Remember, we're only talking about quote-unquote reasonable, necessary living expenses. And they fall into all of these categories: health insurance, car insurance, homeowners insurance, life insurance, housing and utilities, child care, student loans, court-ordered expenses, current taxes, food, clothing, miscellaneous, other secured debts. Now, keep in mind that when you're going over expenses, remember we're dealing with reasonable, necessary expenses. Some categories are limited by standards. On your screen now is a cheat sheet that we use in our office for determining the standards. Things like food, clothing, miscellaneous, out-of-pocket healthcare expense, vehicle ownership costs, vehicle operating costs, housing and utilities. They all have standards based on the family size and or the age of the taxpayer and or the number of people in the household, and the location of the household. So you have to look up the standards for where you live and make sure that the expenses you claim are within those standards and that you're taking advantage of all the standards available to you. So that's enough with the financial analysis. If you want more information about that, watch the segment on financial analysis again. Next thing we're going to talk about, next thing you want to do in an analysis is do the IRS transcript and the compliance check. Now there are many different types of IRS transcripts. The ones that we deal with are the 5 listed on your screen. There's something called a tax return transcript. That's what it sounds like. It's a transcript of the numbers and the items listed on a particular tax return. Those are available only going back 3 years. You can't get a tax return transcript for a return that's more than 3 years old. The IRS doesn't keep the data that long. If you need information from a return that's more than 3 years ago, you would have to request a copy of the return itself. You would do that by filling out a form 4506, and there's a fee that you need to pay. I think it's somewhere in the neighborhood of $50. And then the IRS will dig up a copy of their return out of their archives and send it to you if they have it. Second type of transcript you might want to look at is known as an account transcript. What these are is these show all the transactions that have posted to a taxpayer's account for a particular year or period. So for example, you'll see things like if they filed a return, when the IRS received the return, if they got any notices, how much they owe, if the penalties were assessed. Every time something happens for that year, the event gets logged in the account transcript, and there'll be an amount in the amount column. And then if you sum up all the amounts from the column, it'll be the total that the taxpayer owes that year. So things like payments, letters and notices, the receipt of original amended returns, claims for abatement, innocent spouse claims, offers and compromise, any of those events that would affect a taxpayer's account for a particular period will be listed on the account transcript. These are the most important thing to look at. It'll give you a clear picture of the whole history of the taxpayer. You know, you can see if they filed a return, but you can't see all the numbers in the return. Now, account transcripts are available for a period going back at least 20 years. I say at least 20 years because I don't know if I've ever tried to order one more than 20 years old, but they're probably available if you tried. Okay. Other than that, there's another type of transcript called a record of account. I don't use these that often, but what they are is it's a combination of the tax return transcript and the account transcript. It'll have all the numbers from the tax return in the beginning, and then it'll have all the transactions from the account after that. The reason I don't use them that often is because you don't really need them. You can just get the other 2 transcripts and get the same information. Like the tax return transcripts, the record of account are only available going back 3 years. The other type that you're going to want to look at, the other thing you're going to want, is called a wage and income transcript. These are very important for non-filers. Even for people who have filed and you want to check to make sure that they included everything on the return, you can ask the IRS for a wage and income transcript, and what that will show you is it'll show you all the 1099s or W-2s or 5498s or 1098s or W-2Gs. Any of those information returns that you get at the end of the year for your taxes, they get logged on your wage and income transcripts. This is very important for non-filers because usually when you have somebody who hasn't filed for 5 or 6 years, they don't have their W-2s either. So you got to get the information from the IRS. It is important to note one piece of information that the IRS does not keep from W-2s is they don't keep track of how much state income tax was withheld. You might need that number to accurately report the client's Schedule A deductions, or if you want to prepare state income tax returns, you'll need the W-2s themselves. But by looking at the wage and income transcript, that'll give you a lead because you'll know which W-2s were issued. And if you need the actuals, you can have your client start contacting people to find actual copies. And then the 5th and final type of transcript is called a verification of non-filing letter. This is something that you get from the IRS so they can say in writing that there is not a return for a particular year. It's not something I use in my practice. I think lenders use it sometimes when they need information. They want to make sure that all your returns were filed or not filed because you weren't required to. You can get a letter from the IRS called the verification of non-filing, and that will confirm that you have not filed a return for that particular year. Because, of course, if you did file a return, it would be on the account transcript. Now, there are 3 main ways to order IRS transcripts and to do a compliance check. A compliance check, what I mean by that is actually figure out what compliance issues the client has. What returns haven't been filed, what do they owe, what are their CSATs, all that information. So the first way is to call the IRS. That's the old-fashioned way. The second way is to use IRS e-Services. That's an online tool. You can log into the IRS website and you can download transcripts. And then the other way is to use a third-party tool that would download the transcripts for you and use e-Services for you. So the first method, calling the IRS. This is how it works. If you have a client and you want to do a compliance check, and either you don't have time to wait for the CAF unit, because sometimes if the client comes and they're getting threatening letters, you don't have 2 or 3 weeks to wait for your POA to get processed. You have to call the IRS right away to get the process started. Or if you just don't have e-Services or choose not to use it, what you would want to do is you would call the IRS practitioner hotline to talk to an IRS agent about the compliance history. The practitioner hotline is a special number for tax practitioners. It's supposed to be a lower hold time. The phone number is on your screen. Okay, but I'll give you an expert tip. That is not the number we call in our office. In our office, we actually have a faster way than even the practitioner hotline, and that's by using a third-party service. There's a company that we use. There's several companies, but the one we use is called NQEN, then the letter Q. And what that is a service that they wait on hold with the IRS for you. So if you call them, they'll connect you with the IRS within 2 minutes, whereas you might otherwise be waiting on hold for 30 minutes or even an hour. Once you get an agent on the phone, on the practitioner hotline, you're going to tell them who you are. You're going to tell them who your client is. Then they're going to look you up in the computer to see if you have authorization. If you don't have authorization, then you're going to have to put down the phone, fax them your power of attorney. Only fax. They don't accept emails. So make sure you have a fax machine in the office. Some of you might, have come into the 21st century and got rid of your faxes, but you still need it when you're dealing with the IRS. Then they'll get the fax. They'll confirm your information, confirm you have authority, and then after all of that is done, then you can start talking about the client. The first question you should ask them is, I want to do a compliance check for my taxpayer. Can you please look at their account and tell me what issues you see? And let them tell you. And they'll tell you every year what they owe, and they'll tell you which returns have been filed. And any returns that have not been filed, you're going to ask them if the IRS is looking for the returns. It's a very important question. It's not just did you file, did you not file. Is the IRS in pursuit of those returns? Because if the IRS isn't looking for them, the taxpayer might not want to file. And then you get all the information about the history, and then you ask them for transcripts at the end of the call. You say, okay, you told me he owes for 2007, 2011, 2013. I need account transcripts for those years. So always get an account transcript for any year that has an issue. Either they haven't filed or they haven't paid. And then additionally, you should also get a wage and income transcript for every year that they haven't filed. Now, the problem with calling the IRS, other than the hold time and faxing the POA, you can only get 10 transcripts at a time. If you want more than 10, you got to hang up and call again to get the rest. So you ask for your transcripts. It used to be they'd fax them back to you. Now what they do is they place them in your secure mailbox on the IRS e-Services website. If you don't have a secure mailbox, they'll mail them to you. They no longer use faxes for sending out transcripts because of privacy and security concerns. Now, this is a cheat sheet that I use when we call the IRS for compliance history. It's a little spreadsheet I made. This is just a snapshot of it. It's actually a full page long. And what it is, it's got a place to take notes. Down the left-hand column, you got all the years. And then you got, is the return filed, not filed, substitute for return. And then the next column, is the return required, yes or no. And then you ask them about the liabilities. There's a column for 1040. There's a column for civil penalties, which usually involves unpaid payroll taxes. but could be other penalties. I ask them for the assessment dates. I ask them for the expiration dates on the assessments if they're kind of old. And then I take my additional notes. If there's a collection hold, I put that in the notes column. And I'll fill out that entire sheet for every year. And it gives me like a summary. And I'll take that sheet. We print them in pink paper in our office. They're pink sheets. And they always go on top of the transcripts in the file. So you have a nice handy summary with all the detailed information behind it. That's how you do an over-the-phone compliance check. The other way is through IRS e-services, which is the online tool I mentioned. To do that, you'd go to irs.gov/e-services, and then you click on the option that says Transcript Delivery System. Now, you have to be registered for the Transcript Delivery System. They have to make sure that you're an attorney or an accountant or a CPA or an enrolled agent and that you're in good standing. And they'll give you an account, and then you go into the Transcript Delivery System, and then you log in from this screen, and then you validate who you are. You click the right box for the organization and for who you represent, and then you can start ordering transcripts. Once you have the information, it takes you to another screen where you put your taxpayers' information, and then you get to the home page. You click Online Transcript Request, and then from there, it asks you for your CAF number, and then it takes you to this screen where you can have a matrix. You put your client's information on top, who they are, who you represent, and then on the bottom, you just fill in this little table, and you tell it all the transcripts that you're looking for. You can do multiple years. You notice there's a beginning year and an ending year. You can do tax return transcripts, account transcripts, all the transcripts we talked about. You can request them on e-services and download the transcripts. Now, the biggest drawback to doing a compliance check on e-services, the reason I've literally never done a compliance check this way, is because you don't get to talk to anybody to ask them what the issues are. To do a thorough investigation for your client, you would literally have to download all of their transcripts. And then for 20 years, for whatever's available, and you would have to look at each and every one and kind of take your notes and fill out that pink sheet as you went along. And it would just take forever. I'd rather wait on hold and call the IRS and talk to them and let them identify the issues. What e-services is good for, the TDS is good for, is if you need more than 10 transcripts, you can go online and order them as long as your power of attorney is on file. If it hasn't been on file yet, you can't use e-services. You have to wait for the CAF unit to process it. Or if you just know what you need, you just want to get one transcript, you want to update them, you go online and download them. But always, when you're doing the initial compliance check, call the IRS and do it that way. Don't do it on e-services. Or better yet, we'll do it the third way, which we'll talk about after this next polling question. Okay, so continuing along, we're going to talk about now the third and what, in my opinion, the best way to do a compliance check for your client, and that is by using third-party software that helps interface with e-services. It will download transcripts for you, and then it'll read the transcripts for you, so you don't have to go through them all one by one and take your notes. The software will do it for you. There are several different software companies in this space. I have 3 examples on the screen. One of them is called Pitbull Tax. One is called Tax Help Software. One is called Canopy Tax. They all have their advantages and disadvantages. The one that we use in our office is Tax Help Software, or THS for short. Because that's the one we're going to use, that's the one I'm going to talk about in this presentation. Now, I don't have any affiliation with them. I don't get a commission. If you guys go out and buy THS or a pat on the back, I'm a huge fan of their software. I wouldn't be able to run my firm as efficiently as I do without it. I'm a huge advocate for anybody who gets in the business. I think that you would be not doing yourself a service. You'd be doing yourself a big disservice by not investing in the software, but that's up to you. Like I said, I have nothing to gain. So now, what THS is and what it does is it's basically an interface to deal with e-services. It's an intermediary software that you log into, and you tell it to order your transcripts, and it orders the transcripts for you on eServices, and then it downloads all the transcripts, and it gives you an easy-to-read summary report. So every client we get in our office, we put them in THS first thing. THS actually populates the power of attorney, and then after the power of attorney is on file, we go in THS, and you click about 6 buttons on the mouse, and it downloads a complete set of all the transcripts for the last 20 years. After the transcripts get downloaded, you say generate report. There's a little button, and it generates a PDF report. And this is what I like to go over with my clients when they come in to review the analysis. So I'm going to walk you guys through certain sections of the report and what it looks like. And the first section, the first thing you're going to see, this is going to be usually on page 2, is your IRS account status dashboard. Now this kind of looks like my pink sheets, where it's got all the years down one side, then the next column says if you filed or didn't file, then it says if you filed an extension, if the IRS filed a lien, and then right in the middle there's a column that says collections active. That's the most important column. What that tells you is if your client is subject to imminent garnishment. If the IRS has sent all the notices, all the time has lapsed, they're not on an installment agreement, they're wide open for levy, it'll say that collections is active. It also tells you if there's an open or closed examination or audit, and then it gives you the balances over to the right. As you can see, this client owes about $200,000 for tax years 2013 through 2017, and then they haven't filed any returns since then. Okay, and then you can also see the date that you pulled the transcripts, so you can know you're looking at current information. In our office, we update these weekly. Every week, we download a fresh set of every month. Every week, we do a quarter of our clients. So every month, all of our clients get a brand new set of transcripts and a brand new analysis report. So they're always in our server. They're never more than 30 days old. And after the account status dashboard, the next section of the report will show you the resolution status. This tells you the last activity on the account. You notice that collections was not active on the first page, and that's because if you see the last activity, it says balance due account currently not collectible. That means the IRS has acknowledged that they can't get paid right now, and they've put the client on the back burner. So just looking 2 pages into the report, I know they owe a whole lot of money, but they don't have to worry about it right now because they're already in non-collectible status. So there's nothing urgent. There's no fires to put out. They can kind of keep it on the back burner if they want. And notice how much information we get just from those 2 pages, mostly on this page. In one single place, you see a 20-year history, complete history of your client situation. Once you get good at reading these, you'll start to be able to look at them for seconds and be able to start thinking of different options and different resolutions for your client. After that, the next thing you're going to see in the report is a penalty and interest dashboard. This gives a history of all the penalties that were assessed and all the interest. It gives you an idea of what portion of their balance is penalties and interest, which is useful to know when you're trying to determine if you should go for a penalty abatement or not. You want to know how much is at stake. And you also see their compliance history. From glancing at this for about 2 seconds, I can tell you that this client does not qualify for first-time penalty abatement for any year other than 2001, possibly. Because in 2001 was the first year that they had penalties. After that, they had penalties almost every year. And of course, in order to qualify for first-time abatement, you have to have 3 years in a row of no penalties. And you see that we don't have that pattern anywhere here. So based on what I see, there's not a lot of options for a first-time penalty abatement. And even when it comes to reasonable cause, just looking at this, I know I'm going to have a hard time getting a reasonable cause abatement request granted because my taxpayer has really bad compliance history. Then it'll tell you all the CSEDs. There's calculations that tell you when all of the debts expire, because that's very important. If you have a debt that's expiring soon, you might not want to do an offer in compromise. You won't want to take steps to extend the debt. You might want to just let it lapse, put the client in installment agreement. So now notice when we talked about collection statute expiration dates, I always said they're generally 10 years from when the tax was assessed. I say generally, it's a huge modifier because there are lots of exceptions and there's lots of instances where the collection statute might be told Anytime the taxpayer takes any action that makes it impossible for the IRS to be able to collect legally, then they will likely toll the statute of limitations. So in this software, you'll see that it calculates all the tolling events for the 2014 year. You'll see there's 72 days of tolling. 72 months left at least on the CSED. There was 223 days of tolling on that year. So it gives you the assessment dates, it gives you the expiration dates, and it tells you the tolling dates. And then this next sheet will tell you if the debts qualify for bankruptcy or not. In order to bankrupt a tax debt, it's got to meet certain conditions related to timing. It has to be at least 3 years old. The return had to have been filed at least two years ago. The tax had to have been assessed at least 240 days ago. So this will analyze the 3-year rule, the 2-year rule, and the 240-day rule so that it can give you an assessment if the software thinks you can qualify for bankruptcy or not. Also gives you a 10-year history. If you look at this client, you see that their income went up significantly in 2014, 15, and 16. I'm sorry, I'm having trouble saying all the years, but then it fell off a lot in 17. Sometimes it's very helpful to be able to see at a snapshot your client's income history, see if they're on an upswing or a downswing. A lot of times you want to know their past income because it's relevant to determine their collectability, because the IRS might do income averaging. If there's wild swings and income changes a lot, they'll want to average it out. So it's very important to be able to see a complete history. Then you get a list of every single notice the IRS ever sent your client, what the notice was, the letter, and the numbers corresponding to it. And at the bottom, it's got a legend to tell you what all the notices mean. So you can see all the letters have gone out, when the last one is, where you stand in the process. And then this gives you all the details from the account transcripts. Remember, the account transcripts have a list of transactions for each year. Normally, you would get one transcript per year. What this THS software does is it takes all the entries from all the years and puts them in one document. So you don't have to look at individual transcripts one at a time. You can see in the left column, it tells you when a new year starts. And then it gives you all the transactions from that year. And then it goes to the next year and it gives you all the transactions for that year, and so on and so forth. So this will, take up, these reports tend to be anywhere from 30 to 70 pages long, depending on how much details are in the account transcripts and how many transcripts you ordered. So then after that, the only thing missing from the account status dashboard and from everything we talked about is the civil penalties. That first dashboard only shows you your taxpayer's income tax situation. There's a separate table for civil penalties. Like I said, these are normally quarterly and they're normally related to unpaid payroll taxes. So you have to remember to always look at this table. In this particular taxpayer's situation, they don't have any penalties to worry about. But just don't forget to look at this, because you might look at the first page and see zero balance, but they might owe $100,000 in civil penalties, and you wouldn't know unless you actually flip through the whole report. And then lastly, the last important part of the report I'd like to highlight is this gives you their wage and income summary. This gives me 10 years of history of all their W-2s, all their 1099s, their gross distributions. It summarizes the wage and income transcripts. It doesn't have the details, doesn't tell you who issued the W-2s, but this is an easy way where you can look at their tax return and see if they left anything off. People leave off 1099s or W-2s, and this will be a handy, dandy way to easily see the history. Now, that report I showed you was for individuals. Software also does reports for businesses. They more or less look the same. The categories are different because the types of tax returns are different, but they're the same idea. If you're going to start doing analyses and start doing resolution works, I highly, highly recommend you get THS or whatever other software you prefer to help you look through the situation. So after you've done the THS review, you've got the transcripts, you've looked at it, the last thing to do is to bring the client in to review them and for you to make a recommendation. You should develop your recommendation before the meeting, so when the client comes in, you should know exactly what you're going to recommend. And then you bring the client in for a meeting, or you do it over the phone or via Zoom. If you do it over the phone or via Zoom, make sure you send them the report ahead of time assuming you have a report. I like to print the report and bring it to the meeting and physically go over it with the client. It helps, A, to illustrate what you're talking about for them to flip through the report and to see, and B, it gives them a sense of value for their money. It's a psychological trick that when you take somebody's money, you should hand them something in return. People seem to comprehend value when they're given something tangible to represent what they've paid you for. And hopefully you should be charging a significant amount of money to do this type of work. And it helps that they can go home and they have a 70-page report and feel good about themselves that they got something back from their money besides just lowly advice, which of course the advice is the reason for it, but psychologically people like to be handed stuff. So you're going to review all the information and you are going to exercise your professional judgment based on what you know about all the different resolutions, what you know about the client. You're going to sit and carefully consider their situation and what you would do if you were them. Figure out the different types of resolution they qualify for, what can they pay. You give them a strategy and a game plan, and then you talk to the clients about them. You tell them, I recommend that you do this, and here's why I think this is the best option for you, because of this, that, and the other thing. And then you should quote them a price for continuing to do the work. The analysis review meeting is a sales meeting. The purpose of the client being there is twofold. It's A, for you to educate them on their situation and to deliver on what they paid you for, but it's also, the other purpose is for you to sell them more services again. And that's not a dirty word. Don't be ashamed of selling services. You should sell things of value that better your client's position. So you should never feel dirty about bringing them in to sell them. That's a very important step of the process for you to provide them with whatever relief that they can get. So that brings us to our last polling question. So thank you all for joining me in today's webinar. Hopefully you found it informative and useful and that you know a little bit about how to start a resolution case and how to conduct an analysis. Don't forget, if you have any questions about today's content or about anything else related to solving tax problems, please don't hesitate to call me. I even have a hotline set up just for accountants and attorneys who want to call me for questions. The number's on your screen. Emails work just as well too. Thanks again for joining. Have a good day.